In this week's episode of the Stockscores Market Minutes, an answer to an important question that a number of you have asked me, and that is, should you focus on trading just one thing over and over again, or should you move to where the action is? And I have a good story that will help answer this question. Plus, I'll do the normal market analysis, figure out if we're in for another round of weakness after a pretty dismal February. And then finally, the trade of the week on AMAM. So many years ago when I started day trading, and I've been trading for about 30 years, but I really wasn't day trading in the early years because the technology wasn't there to do that. But eventually electronic trading came into play and I didn't have to actually call a broker on the telephone. And in those early years, I was trying to figure out what the best strategy was. And at a time I said, I'm just going to focus on trading one stock. I'm going to get to know it and I'm going to trade it in and out a few times a day whenever I see an opportunity. And I did that. As I recall, it was with the shares of Dell, which don't even trade anymore. DELL back in those days. I would buy and sell it all day long, and it didn't really work. And there's good reasons why it didn't work. Now, it doesn't mean that it won't work on some stocks. There are some stocks that you can trade every day. There are strategies you can use for trading every day, but I've learned from many different things that I've tried that it is actually better to focus on what we call alpha stocks. And in order to understand the reasons why, I have to go through a few different characteristics of alpha stocks and things to consider in the argument. So the answer is complicated. We've got issues around market efficiency, price volatility, liquidity, familiarity with the stock, and market correlation. Now, in the strictest sense, the market is efficient most of the time. And that means to take out market-beating returns is not really possible. So when I was trading Dell, it was fairly correlated to the overall market. So if the NASDAQ market went up, Dell would go up. If the NASDAQ market went down, Dell would go down. And so you may as well then have just traded the market itself, and that is a strategy. The thing was, though, there was very little opportunity to take big profits because most of the time Dell was normal. And the thing that makes you money in the market is pursuing those times when market efficiency breaks down, when there is some new information coming into the market about a stock that causes it to trade very abnormally. You know, if a stock like Dell back in those days, or anything comparable today, let's say Microsoft, if it goes up 1%, you can put a bunch of money in that and try to make 1%, but you're not really getting great leverage on your capital because you're trading a stock that doesn't have a lot of volatility. And so what I look for are stocks that are trading very abnormally, stocks like this. All right, this stock started this past week, early in the week, at around $20. It went all the way up to $140. Now, most stocks, most of the time, will not do that. But the fact that this one was doing that is what creates the opportunity. This is what we call an alpha stock. It's trading on its own story. It will go up very quickly. It often goes down very quickly as well. And as long as you have a strategy and good risk management, knowing when to exit, these kinds of stocks are far more lucrative than most stocks most of the time. Now, any stock on any day could have alpha, all right? Microsoft on earnings announcements, it could trade with a lot more volatility than normal. Or if a biotech company announces an approval on a new drug that they're testing, it can have a lot more abnormality. But most stocks, most of the time, just don't. They just trade normally with their correlation to the market. Now, there are some stocks that trade with a lot of volatility inherently and still have good liquidity. So for example, TSLA. You can see here by the chart, it in this past week went from 190 to 215. So if you have a fair bit of capital, you can trade it that way. Or you can trade the options. Or there is now a leveraged version of Tesla, TSLL is the symbol, and it trades with triple leverage. So that's a way to take advantage of the leverage. And you could, just simple strategy, buy the break of trend. So there's a break of a downward trend. and it goes up for a while, and then there's a break of the upward trend and it goes down, and you could just be in and out like that, sort of swing trading it. I'll tell you, I've done this before. It's hard. So it'll work some of the time, but it's capital intensive. It is the probability of success I find to be lower than trading alpha stocks, but you can still do it. You just really have to have a good strategy for that. And I've tried it. I've spent many years doing this. I tell you that I've tried this, and there's a better way. And the better way is to focus on those alpha stocks, trading those stocks that are hot that day, that have abnormal volume, that can make the big moves, because that's where you really can beat the market, because they don't have that correlation to the overall market. And so if you want to do well in the market, just focus on alpha stocks. Now, some have asked me, well, can we just trade the index? Again, you can. And if you have a lot of capital, I think that's actually not a bad approach, because it's hard to day trade with millions of dollars. You know, there's just not enough liquidity in the market on these small cap stocks to trade with millions of dollars. But if you're going to trade with millions of dollars, then it makes some sense to swing trade, for example, the index. And so here I have the chart of the IWM, which is the Russell 2000, and you could go short here, downward trend broken, go long there, upward trend broken, go short there, and just be in and out. As long as you have good risk management, as long as you have emotional control, it doesn't matter what you trade, those are the things that are imperative. Good strategy, emotional control, and good risk management. You got to take losses when you're wrong. You got to let your profits run when you are right. And no matter what you trade, that's always going to be important. But if you want to get the most bang for your dollar, if you're not trading with millions of dollars, then really focus on those volatile alpha stocks, the hot stocks that make big moves. There's usually 1 to 5 of them every day. Focus on those. That's what I focus on when I'm trading. All right, let's take a look at the overall market now. Here is the 1 month, 60-minute chart of the S&P 500, and you can see that we have found some trouble because the upward trend line was broken, and we've been sliding lower ever since. So in the short term, we've got a bit of a negative. It's still, well above support, and there's some support here. So it's not terrible. I'd call this sort of a neutral chart. You can see the sentiment stock score is still quite strong, and that's because the longer term time frame is still turning around. You can see here the downward trend was broken. We've talked about this in recent weeks, but I'm concerned about this because you can see that that's threatening to break that upward trend line. So the market does need to bounce back in the next week or two, because otherwise we may break that cycle of rising bottoms. Let's take a look at the Russell 2000, which is the small cap sector, and go for a 3-year. You can see it's essentially sideways for 6 or 7 months. We had the sell-off early in 2022, and it's been grinding sideways, which is actually better than the large cap stocks. So I think it's a neutral market for the small caps, and there's opportunities in them every day, but you do have to focus on those alpha stocks. What about the Canadian market? Let's take a look at the 3-year. Again, sideways, breakdown this past week. That's a concern. Looking at the 1 month chart, you can see the breakdown. We're maybe a bit oversold, probably make an attempt at bouncing back next week. But until we start to build rising bottoms in the short term, I recommend a bit of caution. In the long term, things don't yet look that bad. How about some of the commodities? Someone asked me about natural gas, so let's take a look at UNG. It's ugly, plain and simple. It's gone down a lot. I know some people will say, well, it's cheap. Let's buy it because it's cheap. Buy it when it starts to go up, and it's really not. It had a couple of days of a gain at the end of the week last week, but there's no rising bottoms. You're still in a downward trend, so wait for the trend to turn before you jump into something like natural gas. How about oil? BNO is a symbol we can look at. You can see that oil more or less sideways the last few months. In the context of the 3-year trend, we are still just barely hanging on to that long-term upward trend line. We got overextended, we pulled back. I think oil probably just goes sideways for a while. If it breaks down sharply from here, I'd be concerned. If it breaks up sharply from here, I would have some optimism about oil. How about gold, GLD? Let's take a look at the 3-year. You can see that we made some good gains. We're giving back some of those gains as we've come into resistance. Not out of the ordinary. What I want to see though is for it to start to turn around, close the week above the open, and perhaps move higher from there. How about, what else we want to look at? Let's look at currencies. UUP is the symbol for the US dollar. You can see the gains there as the market sort of thinks maybe interest rates will remain high in the US, and that brings that value up. 3-year chart of the US dollar, it basically bounced off of its upward trend line. It just had dipped through it, but it held. Will oil do something like this? Oil was also at the upward trend line. It really hasn't made the bounce. I think US dollar is going to come up here, make a falling top, and then ultimately normalize again. That will have an effect on the bond market. So TBT is a chart for interest rates. You can see interest rates have risen a little bit in the month of February. That's what has the market spooked, but it's coming into resistance. I think we're probably going to see it reverse and just kind of go sideways in this range for a little while. Let's talk about Bitcoin. A lot of you like to trade the cryptocurrencies. It recovered in January, much like stocks did, but it's now hanging out below resistance. It does have a rising bottom, so if it could break out through that from the rising bottom, then actually there may be an opportunity to be a buyer of cryptocurrency, Bitcoin being the leader. But until that happens, I wouldn't touch it yet. It's, maybe if you're day trading or something, but longer term, it's still not a great looking chart. All right, so let's take a look at my ratings then. US stocks and Canadian stocks neutral on both time frames. Gold neutral, short-term bearish because of the pullback we've seen. Oil neutral on both time frames. US dollar short-term bullish but long-term neutral. Bitcoin neutral on both time frames, and interest rates short-term bullish, which means they're going up, but still long-term, I think we're destined to go sideways. All right, let's take a look at the day trade of the week. And this week, it's actually not a day trade, it is a swing trade. And this is on a stock that is an alpha stock. It's a great example of what we talked about at the top of the video. Stocks that I like to trade. 2 weeks from now, I'll probably completely have forgotten about this stock, but this one was a hot stock this week on a week when the market wasn't all that giving in terms of opportunity. And what you can see is that it starts behaving abnormally right there. You can see the volume spike, and then it quiets down, and then it starts up again, and it quiets down, and it starts up again. And so as a trader, one of the things you can do is not chase the excitement, but rather wait for the pullback, and then when it starts to turn, buy again. So it gets exciting, and then it gets boring, and people forget about it, and then it starts to pick up again. Those are the times to be a buyer. Buying at the trend line as opposed to chasing to the top of the channel. These are bad places to be buyers, and yet that's when it trades the most volume, which tells you the most people are trading it at that time. It's a very important lesson. Don't do what most people do. Go against the grain, but make sure you're still trading a hot alpha stock like this one, and you'll do just fine. Well, hope that you've enjoyed this week's Market Minutes. If so, click on the like button, leave a comment. Do you think the markets are going to go up or down next week? It's kind of a critical week, so let's get your feedback on that. Most importantly, trade well.